the venture capital role in blockchain innovation. I think I want to start with the big elephant in the room, which is politics. And Gabriel, you are on that side of investment space that is looking at the institutional market, but more also on the retail side. How is the US politics and Trump presidency affecting your investment decision?
I think something for us is that the market tailwinds are never really impactful in how we choose to make an investment. We're always investing in the same types of people. We want founders that we can believe in. They're going to be nimble throughout market conditions. They're going to be able to potentially pivot, change their strategy when it becomes relevant. But you can't really time a VC investment with this like locked liquidity over years with market cycles. You make your investment and then you have to see what it's doing. You can't be making trades based on market cycles. So for us, it's always the same investment. We talk to the founders, and is this someone that I can get behind? Is this someone that I know is going to make maybe not the best decision, but do their best to make the best decision and pursue the goal that they're looking to pursue? And it's also why the kind of business plan is also just an indicator into like how well I can judge the founder. And it's just a component of my overall picture of the founder rather than being the reason that I've invested. So
it's really about the people and ability to execute than whatever macro environment or regulation.
Exactly. But the macro environment does mean that we might invest like larger tickets.
Yeah.
So our risk profile as a fund changes, but we'd never invest in someone that we wouldn't have otherwise based on the macro conditions. So.
I think like the really big challenge is about execution, because you can have, many people have got brilliant ideas, but actually is executing them what is difficult. Now, Malak, you work closely with investors and also founders. And what I would like to ask you to start with is, which do you see being the key trend in alternative investment?
Yeah, that's a really good question. I think the key trend is that a lot of founders are struggling to catch the interest of VCs. So what they're doing is that they think, well, if we launch a token, we're going to get access to a lot of capital, a lot of liquidity, and we're going to build a community. But that's not really the case, because 50% of altcoins die. And that's not even my words, but according to CoinGecko report that says that. So in the sense that, now we are moving on from the ICO period, and now it's altcoin season, but to which extent are founders ready for this? Because it's not an easy kind of thing to do.
It's quite interesting because obviously when you are raising money via tokens, you access different type of investors. They actually get into equities. So I want to go back to you, Gabriel. So with Fasanara Digital, do you take both the token and the equity approach, or do you do just one of the two?
It depends on the company. Right, it's something that we've kind of started preferring is the token approach, but it's really fast. Like, are we going to be users of the product that we're investing in? So it doesn't really matter how we get our share in the company. We really want to be like power users. We're a high frequency trading firm. We trade like billions of volume per month. So the projects that we invest in need to be synergistic with our activities. And whether that's through typically it's DeFi stuff, right? It's like on-chain leverage, trading platforms, yield platforms, and this is stuff that can be complementary to our typical trading activities. Therefore, we don't mind how we get a stake in it.
It's very interesting because, sometimes you're talking to investors, they say, right, we prefer the token. Some others say we prefer actually equity, and the token comes as a plus. But if you actually invest in tokens, you need to be able to have the kind of liquidity and help out with market making as well. So maybe it requires a different type of also investors to kind of support a project that is launching a token. Now, Malak, red flags. So when you talk to founders, which are the red flags that you say, right, that's wrong?
So these could be the red flags for a retail investor and a VC as well. So that applies to everyone. The first red flag is that if basically 50% of the maximum supply is allocated to the team, including VCs, then that's a huge red flag. That means that, obviously when the token goes live, they're gonna probably dump the token. There's a chance for that, so you obviously need to be quite secure. The second one would be that the team is not doxed, that you really don't know who are the founders. And, back in 2018, that was quite normal. But now it's became like a precautious that you need to do your due diligence on the team. And most importantly, that you need to know if a founder did a project before that and what really went wrong. Because obviously when a founder what is not like a first-time founder, they probably have had a history of, failing projects and all of that. And failure is fine, but it's always good to know that a founder did not scam or had any history with any scamming projects. And the third one is that if it's a community token, I'm not really much of a fan of meme coins or any of these things that do not really have utility. So if it's a community token or if it's a game project that has not been live and they're launching like a free mint of NFTs, for me that's a huge red flag, because first comes product and then you can, build a hype. But without a product, you cannot really prove a proof of concept or, have a product fit into that.
One of the things that I feel is becoming more and more important when it comes down to project in crypto is about community, actually being able to have a product that is appeals to your community as well, and the ability to communicate and engage with community has become kind of a skill, right? You are investing in people because they can execute, but at the same time you need to invest in people that are good representative of their community and they can engage and they can get product adoption and activate this community is important. So Gabriel, how do you see this element, being part of your strategy?
I think it's super important. What you want in a protocol is someone that can rally a community into having this subsection of your token holders or equity holders that are never going to sell in any market conditions. And everyone knows that there's die-hard fans of every cryptocurrency out there. And I think what proportion of these, the total assets that are out in circulation is held by these die-hard fans, I think is quite important, because you'll have people that, it's like the original Bitcoin holders. No matter how many drawdowns, they're always there. And I think in a community sense, especially when you have a platform and an app, these are your power users. These are the people that have practically put your vested tokens at infinity. They're never going to sell. So I think it's quite especially for layer 1 blockchains, this is a big thesis of mine, L2s as well. For apps, I think it's not as important. I think L1s, they benefit a lot more from these these power users that will be a champion of every single app on the chain. But I think it is super important.
Let's talk about AI plus crypto, because that has been kind of like a key trend, especially, as we are already in 2025, we are seeing what is going to be what's going to be the narrative of this cycle. So in the previous cycle was all about Ethereum killers, and then we have got Solana that kind of won the race, and then obviously meme coins. What is the key narrative of this cycle, and how much AI is playing a role?
So that's a very interesting topic. We started back in 2024 with the idea of AI agents and how much these autonomous agents are able to even trade and buy and sell crypto, which was interesting. But then we're seeing in 2025 a new kind of theme of AI where they're leveraging blockchain for private AI. So private AI means that you're running confidential computing on a decentralized cloud system. So you're basically running it on nodes. And this is a very fascinating world because at the moment in Silicon Valley, there's a lot of these centralized cloud systems like Azure, even cloud, Google released a cloud system as well, but they don't really are not very scalable in the sense they're very expensive, and that's why blockchain and AI kind of come into the mix where you can benefit from this using a technology called TEEs, which are trusted execution environments. And I don't want to go much into details, but private AI is a very fascinating topic because you can actually train these AI models through this kind of like an isolated area that you can train them without even the system that is hosting this transaction or this computation to actually see what's going on. So this is very important because we saw with ChatGPT or DeepSeek, there's a lot of these data breaches. But what if we are running like an open source or even a closed source AI system on a decentralized cloud system? Then we don't really have to have all the bad and the good sides of AI. We can just extract the good things.
And something that I've seen mentioned at some conferences and not mentioned at others is I think UX. Everyone knows how tricky crypto is. You have to how you trade, how you sign transaction approvals, etc., etc., etc. I don't need to explain it to most of you, I assume. But I think UX is such a massive enabler by AI. The fact that it can automate all of these actions, so you can just express intent for what you want to do, and you might not know how to do it, but that's fine because the AI can do it for you. And I think for really breadthening the type of users that can be on crypto, I always think could my grandma use this? No, she doesn't get how yield farms work, she doesn't get how lending protocols work or DEXs work. But if she can be I want to buy this asset with this asset that I know I have, and she expresses that intent, then if thanks. If it's executed, then that's ideal, and I think this is how we onboard the next majority of users.
Yeah, and definitely, obviously, blockchain can actually make AI more accountable, more transparent, and audited as well. So it's definitely a very interesting intersection, AI plus crypto. And then obviously we have got DeFi, which if we see more clarity on regulation coming from the US, perhaps DeFi is going to be actually a key driver of this cycle as well. So at Fasanara, Gabriel, how are you looking at DeFi? Which aspect of DeFi especially are more interesting for you?
I think something that I'm particularly looking forward to over the next, and I wouldn't be able to put a timeline on it really, but it's more the kind of convergence of the risk reward for different yielding strategies essentially. At the moment, DeFi kind of has a risk premium because people don't understand how it works. You can get 10, 20% on stables fairly safely. And in TradFi, obviously, this is far beyond, far higher yielding than most of the ways that you can deploy your capital. So even though it will result in our yields going down, I'm kind of excited for these to start converging because I think it will really show that the risk profile of capital on chain has changed and that people are using it as a capital allocation place. They keep their capital there, and then this is how they decide to distribute and allocate it. It's not allocating it into crypto, which is why they bring their capital on chain, but it's more their capital is on chain, and then they decide how to allocate it. And I think that's a massive, it's a very important differentiation, and I'm super excited to see where this stuff goes. I like DeFi stuff and I like yield stuff. I like stuff that I don't understand because the maths is too complicated. So I wanna see more of this and then hopefully try and understand it and then see how it can fit into composability and the interweb of DeFi.
Okay, so Ash joining. Great. Let's go straight to you with one of the questions that we have been bouncing back here. What is the main investment thesis for 2025?
That's a great question, and sincerest apologies for being so late. I think from our end, we are very excited about the mainstream use cases of distributed ledgers. So stablecoins for us are the future of financial services. There's a lot of cross-border transfer that we are now seeing as well. So for example, I'm sure everyone in the audience knows like Wise or Revolut or Monzo, etc. All of these different fintech companies are now leveraging stablecoins. So that's, for us, one of the biggest thesis areas for this year.
So it was very interesting because I had a discussion about the role of actually stablecoin in the future of finance. And somebody said to me, stablecoin are actually the foundation for the tokenization industry to actually happen. And without stablecoin regulation, you don't have the fundamentals to actually do tokenization of assets. Would you agree on that, Gabriel?
Yeah, I would. I think it's something that's similar to like what we're doing. Everyone's taking baby steps into the world of crypto, and for traditional financial institutions being regulated, this stuff can be pretty tricky. So everyone's kind of pushing out the boat as quickly as they can. Maybe it started with stable coins, now it's money market funds. Everyone knows that there's not an insane amount of profit to be made in money market funds, but everyone just wants to take that first step, build those relationships, explore, and see how they can participate. And I think I'm super excited by what it means for crypto. The fact that this is one of the most significant assets is being tokenized, and I think it's just showing that it's gonna pave the way for others to be. And this is when stuff starts getting fun, I think.
Great, Malak. Question to you about advice and recommendation. That when you talk to founders, what's the piece of advice that you give to them to make sure that when they pitch to a VC, they are successful?
Okay, so there's like 3 tips for any kind of founder, whatever kind of project that you have. The first one is do business with integrity and honesty. A lot of founders, they put a lot of like logos onto pitch decks saying that they're partnered with this, with that chain, and it's always good to be honest because VCs always find a way of, checking if these information are right. So you have to be as honest as possible and accept vulnerability. It's okay if there's things that you need help with because VCs are not there just to provide capital. VCs are here to guide you, to help you. So if you even need an expert in tokenomics, you have to be super upfront. And that is something that I struggle with when I'm talking with founders, is that they always think that they need to be perfect. But in fact, you just need to be super honest when you work. And the second point is about building a product, and then you can, think about other things. Building a product, at least for myself, I think it's super important because you need something tangible. And once you build a platform, then you can actually create a wait list, and that wait list kind of converts into, a kind of way that you can track if there is any traction or interest from the product, because a lot of founders are focusing on X or Discord groups, but it's not really much enough for that. I know that community plays a big role into that, but we have to take into account that we need testers for your product, especially if it's a platform and like a chain, like an L1 or L2. Bring builders, let them try it out and get feedback. And if things are not working out, you can always pivot. So this is the second advice. And the third advice is just to always be fast to changes, because crypto change quite fast and you always need to react quite quickly without hesitation. So these are the 3 advice.
I think one of the very interesting things is that when you are building a product, it's much better if you actually can show the investor that you have a community of, let's say, 50 people actually using, testing what you have got, than nobody, we will think about, about the adoption later. is much more powerful to have actually a community. Now, Ash, I want to ask you, how do you evaluate returns, VC returns, when we are talking about blockchain company, and how is different from investment in traditional tech firm?
That's a great question. So I think as we are all native investors, we like to think in numbers. So there are automatically a lot of detailed frameworks that have been designed to look at different kinds of companies. So for example, if you have a DeFi token, one of the most important parameters that you'll take into account would be FDV versus TVL versus, in traditional markets, the way you would look at market cap or the total supply. So that becomes a very, very important aspect. And then in traditional markets, when we invest, we look at mostly outcome tables. So we would design like specific financial models. We'd look at free cash flow, all the other, financial terms that everyone else is familiar with. So the key differences then become not just what the value is today, but how the value will accrue for that specific token. Or if it is, for example, a network, how are they thinking longer term? How would the ecosystem evolve? What would be the product R&D that would take into account the different aspects of the token development? And at the same time, and very importantly, the value accruing over a period of time, how will that be distributed in terms of rewards to the community? So the mix-up of the shareholders, which traditionally is not that important, becomes a very important aspect when we look at crypto companies.
One of the things I'm gonna give you the opportunity to reply and maybe add on is about valuation, right? So you explain some very important aspect of what is important, what is not important. But what we have seen, especially in crypto, is that like a bigger hype on valuation, company valuation. I'm sure that all of you had this experience. So when you are evaluating a project and kind of like find a middle ground to say that's what because as evaluation is also subjective. We are not talking about public listed company. What's your approach when it comes down to valuation, Gabriel? And feel free to add on the previous comment from Ash.
I think it depends on the stage of the company. I think pre-seed, seed, you're throwing a check into the abyss. They don't have anything yet. It's normally an idea or like a fragment of an idea. And this is why I always say you're investing in the person. But in that case, like all of these valuation models, you can't. I don't think they're too valuable. And sorry, what was the last question that you asked? Okay, yeah, and I think these valuation models. It's more the later the company is in its life cycle. In day one, hour one, where these founders had an idea, or maybe they've been developing a proof of concept, etc. You don't have any real data that can be meaningful in you making your investment decision. Maybe it's simulations, and there's obviously many issues of those typically, but there's never anything too meaningful. So that's why I think of it as you throw the check into the abyss, and you hope that in a couple of years, with your help, that you can find out the fruit of your investment.
So basically, it's mainly investing in people. Malak, you're...
Yeah, so I don't know if this is working. So when it comes to market valuation, I mean, if you're pitching to a Web2 VC and you're saying that, we want to raise this amount with a 50 million valuation, they're going to have an automatic no reaction. Unless you are, having a fully diluted valuation, then when you speak with a Web3 VC, they understand, okay, well, it's 50 million, valuation, which is really normal. So it really depends. You usually need to have like a less of an imagination of a Silicon Valley valuation if you're talking with a Web2 VC, because it's going to be much harder for you to sell it at a higher valuation.
Is there a different question? Should I just add on?
Just add on the valuation. I think it's quite important because people have got some kind of expectation, but sometimes the reality of actually is the value is different, and I see always that clash between investors and founders, and also agreeing on the valuation is probably the biggest hurdle when you are raising capital.
No, that's very true, and a lot of our day-to-day negotiations happen on exactly that, valuations as opposed to round sizes. So I think as a fund across industries, across AI as well, the way we see it is look at the amount of, let's say, token supply or the equity piece that you can dilute at a certain stage, keeping into account the ecosystem, the community development, but at the same time raise enough to ensure that you have at least 24 to 48 months runway, assuming you're not going to be making additional capital, which is also assuming that you're not going to be diluting more of the token. And take into account all the development costs, team costs, etc., which makes sort of, for like this really interesting model where you reverse engineer the kind of valuation range that you can be comfortable with, and within that range, then the negotiation happens as to where exactly the investor and the founder can kind of rely on. So that's pretty much how we kind of always do fundraising.
Great. I've got last question. If you have to pick up one sector, one area that you say, right, I bet this is going to be the big things in 2025. That's where is my bet. That's where I want to invest. So that's where I think is going to be, there will be the biggest return are going to be made. What would you choose, Gabriel?
I feel like people might be able to guess my answer, and it's DeFi. I think more specifically, it's going to be really boring DeFi yield products, and I think they're going to do very well. And even though they're boring, I'm super excited for them. So,
I mean, yeah, just to comment on Gabriel, I think the most boring sectors are actually the ones that are going to stay for the long run. For me personally, I'm a big advocate towards private AI, so I would definitely be vouching for any kind of decentralized cloud system that is offering to builders a very affordable computations to run on these ecosystem chains and to actually run dApps that are not compromising user data.
I think that's very important and will be a big narrative is like privacy and crypto, because not everything can be transparent, not everything can be on the blockchain. Another one that just I think is going to be quite interesting, maybe it's not going to be the main theme of this year, or not yet, is governance, which has always been like very difficult to get decentralized governance. I mean, it's been the big problem in humanity. Maybe we are not there. I know that Cardano Foundation is making some very interesting progress there, but maybe we are still too early to see some kind of like full decentralized governance. Ash, what's your pick?
Yeah, it's very hard to pick one, to be entirely honest. I think we are focusing primarily on 3 sectors. The first one is decentralized identity. So exactly what you said, the data piece, but data of humans. So kind of proof of humanity, but in an identity sort of recognition platform. So DID is an extremely fascinating area for us. And we are the kind of investors who invest thinking like the next 10 to 20 years in mind. So being long-term kind of gives us this capability to actually not be concerned about immediate liquidity. So that's why DID is very interesting for us. The second, of course, like I mentioned, stablecoins. So specifically in stablecoins, we're very excited about the picks and shovels around the middleware. So how do you kind of integrate into existing platforms and existing distribution that sort of is prominent in the world today? And how do you plug yourselves into that while ensuring stablecoins can go mainstream? So that, again, is something that we are very interested about. And then the third is more along the lines of DeFi, but specifically in DeFi, we are very excited about sort of the ones that are able to go after the financial services space for industries as well as supply chains. So there are a few companies actually in China that have become unicorns recently and are leveraging blockchain in the back end as well as DeFi protocols in the back end, and the front end user is not even aware of it. So basically anything that is able to solve a problem in the supply chain manufacturing side of things using DeFi protocols is something that's very exciting for us.
Interesting. So another one, a final one, right? We are on the RWA stage, and we were talking about what is going to be the next big things in institutional market, and perhaps RWA is going to be the one. Where do you think we are right now with the tokenization? What should we expect to happen this year?
I don't like giving timelines. I don't like giving timelines. I think this year, like, more and more people will start to get interested. Like, that's for sure. I don't know if there'll be like meaningful steps in like tokenizing that many more things in a way that's like actively used. I think, as I was saying before, it's like people are taking the steps, and I think we're not yet at a critical mass where there's going to be on-chain liquidity for all of these like RWAs. People are trying to make it happen, but I don't think we're there yet. And I think it'll be at the point where like there are so many assets on chain, we have to trade them on chain. But now the on chain's kind of like a broker for these like moving about of assets, and it's just it's still a playground really.
Yeah, I actually agree with Gabriel. I feel like TradFi assets are going to make much progress this year, but non-traditional assets are going to have some problems with liquidity. I also see that given like Trump's inauguration and his presidency, we're going to see more regulation framework regarding stablecoins. He already released Genius Act, which kind of outlines kind of the regulatory framework for stablecoins, so for USDC, USDT. Unfortunately, I'm a bit skeptical when it comes to Europe because the regulations towards crypto is becoming more and more complicated. So we're going to see, in my opinion at least, that US is going to be pioneering in the stablecoin/RWA space.
Yeah, I think I completely agree with everything said. Just to add to that, I think RWAs will go mainstream only because of traditional assets that don't have liquidity already. So one of the examples that I really like to go with right now is CFDs. So CFDs historically only have 8-hour liquidities out of the 24 hours in a day, prominent in Asia, Middle East, and all emerging markets, multiple trillions of volumes on a daily regular basis, and historically has not been able to kind of penetrate into the Western markets because liquidity is not available during the trading hours in the Western markets. So such an asset that has not found, in a way, product market fit in the historical TradFi market would actually take RWAs mainstream. I personally don't think tokenization of real estate or fractional real estate, etc., is going to go mainstream anytime soon. But at the same time, tokenization of assets that go beyond financial assets is also a possibility. Just not this year, probably.
And then maybe I wanted to spin a question on Stefania, and so she's got a podcast, if you don't know, and she has lots of interesting guests. So I wanted to ask, which guest have you disagreed with the most on your podcast?
Right, the one that I disagree most, probably Peter Schiff. So I got him on the show to kind of try to challenge him about obviously his views on Bitcoin, because I think Bitcoin is now an established alternative asset. We are not proof of concept anymore. And still, you kind of see him fighting it. And then what I realize is actually he builds his whole narrative around being that type of character. So on television, he can look quite cool because he has got his point of view to defend, but there is not enough substance behind it. And yeah, it was very interesting to see Levin, fighting, and then gold, talking about gold. I mean, Bitcoin is now, maybe 2 years ago, 3 years ago, you could still have that kind of argument, but after the ETFs launched last year, I think this argument is dead, and now we are seeing even more cryptocurrency getting their own NFTs, Solana, now we have got people even doing Cardano NFTs, so we pass completely that kind of moment where crypto is kind of like an experimental playground, and it's very exciting to see that actually now we are talking about real world assets coming to the blockchain. It's very interesting as to what you, and thank you so much, Gabriel, for that question, what you said about that we are not there yet, but there are very interesting use cases that perhaps can be unlocked and become important when we talk about RWA industry. And I was thinking, you see, when even art, right? So, or fashion. It's true, there is not enough liquidity, or maybe it's going to take a long time till we have liquidity. But there is an important element about supply chain and about traceability of the unique piece that is not actually possible to, or it's very hard to verify in the real world with traditional system. So perhaps that's where you can actually build the liquidity and at the same time add proof of identity. So perhaps this is what maybe we can look forward, maybe not this year, but maybe in the future, is to kind of unlock these new markets for digital assets. Okay, thank you very much. Thank you very much, Gabriel, Malak, and Ash.